What's good, guys? It's Nick, just popping in here. Quick video tonight. I just kind of wanted to go over some general technical analysis, more of a micro-ish video, but I always like to start with the macro. Always preface that I am a licensed professional in regards to being a broker. I have my Series 7, 63, and my SIE. However, I'm not a licensed financial advisor, so anything I say here is strictly just opinionated, educated opinion from time on the desk, along with some market dynamics and momentum style trading that I've learned with my history at TD. No longer sponsored by a firm, so all this is legal and valid to say. Again, it's just my personal opinion. I have my money allocated where I feel it needs to be, in a way that I'm comfortable with and that I trust personally, but in no way am I trying to convince you to buy stuff, hold stuff, whatever you may think. There's a lot of crazy acquisitions on Twitter in regards to intentions behind it, which I don't even want to give any attention towards because I think it's foolish and kind of blasphemy that people truly think that because they saw something on Twitter, it's therefore financial advice, and that the one that gave the opinion is responsible for the one that made the investment. So anyways, now that we're past that, just want to give a macro perspective on AMC, what I'm looking at, and how things are lining up. So this is just kind of your weekly candles on Heikin-Ashi candles. So it goes off of open high, closed low. It's just a little bit more dynamic than standard candles. Just gives you more of a sentiment in regards to flow, trend, and kind of how to read that. So basically we're sitting up. We ended last week very strong, broke out of the trading range. We'll popped into a new one. And when I say trading ranges, I mean these lines right here. These are trading ranges to me, the date all the way back to January and before then, and kind of some key trends that we've really kind of been hitting off of. So I just like to cover these, and they've been almost hitting to a T lately. So they're very valid in my opinion, and I'll continue to use them until they're disproven. But this is just some great foundational TA. So in regards to this, this was last week. This is our current week setup. We went down and retested the low, kind of this macro fulcrum point that we'll get into a little bit more on the daily. Broke through this trading range and then came up and retested the top. We actually even broke above this, or actually tested almost right off of this, that we'll get into more in the micro. But it's really healthy to see us kind of break through a trading range, test another one, come back and back test it, kind of something I've been talking about a lot lately, and then continue to hold the pressure up. We closed at 1352. And we had some spike ups to close to $14 on Thinkorswim, and it's not those market maker orders that everyone's getting on Webull. This was someone legit buying right before market close. I didn't get a chance to see what the orders were. It was right before after market close, but I'll show you on the micro as we get into it. But I just kind of want to show you that the trend is still continuing. I kind of like how we popped up here. We're getting like this kind of wave on the weekly, because that's kind of exactly what happened here. Is we popped up and then got this like little wave. I know I said this is similar to like a 34 run, but we're still working out kinks on exactly where we're at in the schematic. I think we're still accurate, but I'm going to take data points as it comes in and what it compares to best. But we kind of get something similar here. We get that nasty pop up, deep retrace, got a little wave outside, got this little wave here outside, and these are weekly candles, so I'm not saying our week is going to end up like this by any means. I think the algo's sped up now, so it could be a combination of these two. So I'm really thinking we still got a lot of upside left, as long as broad market doesn't just completely flush out. I'll show you what I think we can test here soon and why I believe so, and what's to come in the next few days, heading into the weekend. So we'll go over to the 1 year, 1 day, and I'm going to keep it on Heikin-Ashi for now. Usually once I get more into the micro, I take Heikin-Ashi off, just because it's easier for me to read the standard candles at that point. I don't necessarily need Heikin-Ashi to understand exactly where we're at. But you can kind of see here, This is actually very, very crazy to see because if we're going based off of my last video, I was saying that here's kind of your M style. You can't see it as good on the Heikinashis, but here's your left side of your M, comes down and then drops to a lower point there. So it's kind of what this was, dropped to a lower point and then got a little ride up and then popped up, and like this is what I'm gauging right now, like the equivalent of a 34 run. I know it doesn't look at it like it, but different schematics, different volume, different scenarios going on. But we broke up and pierced the top of those ESD bands, which is exactly what we did here, and we got a deep retrace. In this scenario, we kind of caught a little bit quicker. There's different things in play at the time, but with market conditions, they were just able to flush a little bit deeper. And you can't tell in Heikin-Ashi, but it is somewhat similar. You kind of get an M style here, to where you get this test up, retest to break down, break the macro trend, and then this right here is very similar to this right here. But like I said, we're sped up, so with this indication, you can kind of see how we get that deep retrace to basically retrace previous breakout ranges. We did the same thing here in this zone. And then if you go in a little bit closer here, you can kind of see you got this similar candle that we got today. Like very similar. Like we didn't quite get too much underneath, but again, that's Heikin-Ashi, so I'll show you some similarities when we get into different candle patterns. But it's looking oddly similar to where our 50 EMA is running up with the top of our ESD band, which is good. It's going to be a heavy resistance to break above, but I think we very easily could, because if you get into these Heikin-Ashis a little bit more, I think it makes a little bit more sense when we zoom in. Let me get down here. 1 second here. I don't know why it went so far in. When you get down into it, you'll see where it shows you how yesterday we kind of struggled to get above this ESD band that we were on right here. We broke above it, but then we ended up actually closing, I believe, down beneath it. It may have even been right in the middle of it, I believe is what it was. I'll show you on the other candles here in a sec. But this Heikin-Ashi got the break through it on the daily candle. We tested the top of this range, and then came back, retested our 1320, or about 1320, and then kind of popped back off of it and closed at the 1352 mark. But there's just a lot of similarities kind of pointing into that pre-June run-up that I just wanted to continue to hit on, because nothing's really changed in regards to that. Like, we're honestly exactly where I said that we were. And it's been proven the last couple of days for me, based on just how I've been able to calculate the day and the trading range and kind of our style of movement. So I'm going to continue to track this until it proves me wrong. That's usually what I do with a lot of my indicators. But what's really cool here is these are your standard candles now. So yeah, yesterday we did break through that ESD, closed above it, and then today we actually got almost a full entire candle close above it, outside of that morning dip that I mentioned off open. So kind of what I'm gauging here is, I know these ESD bands are a little bit different, but you can kind of argue this is the one that we're currently on, with this style of movement, because it is compressed. You see you got a green, red, red. In this case you got a red, 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 like almost 4 of them, but they have been compressed a lot. And then this time you got your 2 greens, but in regards to this, like they're suppressing it much harder now at this point. Like, a lot of these institutions seem to be doubling down on their positions, which makes no sense to me at all. Like, I don't know, I really can't believe they're doing it. I don't know if they probably just don't have a choice, to be honest. Like, a lot of these guys are literally putting their firms on the lines. Not necessarily Citadel. I know they have a very large position and they're completely shady, but there's like D1, Tiger Global, Virtue, Who else are we thinking of? 0.72 Susquehanna, however you pronounce that, Sacagawea, freaking firm. They're dirty. If you want to look up into some sketchy firms, a lot of the ones I just named have quite the reputation. But I mean, they've been effective with what they've been doing. It's just like they've been allowed to do so because of the lack of authority within the SEC. So within this, like, you can see how we're hopping the trading ranges very healthily, and we kind of go up and test it, come back under, and then break it the next day. Well, what I'm gauging here tomorrow, and we'll show you here in the micro, is that we broke through that 1320. Like that 1290 range of 1320 was very big for me to get out of, just in regards to sentiment and kind of shifting the tides here. If we couldn't get above that 1320, we definitely had some potential more sideways trading to like retrace down here, but this break really confirmed a lot for me. I think we broke it at a healthy range too, to where we gave ourselves a buffer room to have some buffer for pullbacks or whatever they want to throw at us, which is always nice to have. So that's kind of the daily. Your OPV down here is rising again, which is extremely bullish to see. It's, again, very similar to this, where we got our peak and then kind of rode down, found a deep low, which is right here, and they gave us kind of another low, and it came up, kind of this little blip up here, came back down to retest it, and then now we're kind of in this range, I would say. Obviously, I mentioned just a little bit ago that we're more into this range, which is very possible as well. But I'm just giving my daily perspective, or kind of midweek perspective, now that we got 3 sessions out of the way. It gives me a good amount of data to go off of. But what really interests me is honestly this 4-hour 180 day. Someone asked me before why I use 180 days as a time frame. This is something that's been preset in my Thinkorswim since I became a broker, basically, about almost 5 years ago now. But the 180 day, I mean, if you do the math, that's basically 6 months worth of days or trading sessions, to where what that gives you is roughly 2 quarters worth of data. Allows you to gauge macro trend and kind of give you a good sentiment, because there's different cycles that the market trades in. So 180 days gives you 2 quarters worth of that. Typically, that's 1 or 2 cycles, depending on what's going on broad market-wise. So it's just a strong indicator, along with the 4-hour candles. That's kind of just, I mean, in a trading session, you get 2 4-hour candles. And then you got your after hours, of course. And then with after hours too, another thing I just want to hit on with that is I always keep after hours on. I think having them off, like, 1, it can throw off your viewpoint, and 2, you got to think of how these indicators pull data. Like EMAs and stuff like that don't just come out of thin air based on a trend of a stock. Like, it needs data points to pull from. So if you're taking off after hours, you're basically given like a 10 to 15 plus hour gap within your data points, to where it won't start picking up again until market opens. And to me, that's just data that's not being found within the trading range, which I'm not about. But anyways, let's kind of get into this, and what's exciting me most about this style of movement that we're in right now is that there's a lot of key things going on. So I'm sorry I'm keeping this relatively short and going quick, but I need to get some sleep and got a few things yet to do. So this is our 4-hour. Obviously, this Friday was a huge break. I believe it was a Friday, yeah. Huge break over. And then, of course, the shortest back down off the 200 SMA. And came back through. And then once they got us back under the ESD band, that center band there, which is your standard deviation band, it kind of flushed us, because I said before too, like, your macro trends can play in part with your trend indicators to give you either a stronger cross to the up or the downside. So they not only slipped the ESD band, but they also slipped this rising support. This is the same yellow, orange, and red line from before that I've showed you guys. The macro lines off of January. So what's intriguing about this is that I've mentioned that when we cross the upside on the 50 EMA, like when the ESD band crosses the upside on the 50 EMA on the 4 hour, those are my strongest indicators showing upward movement or explosiveness within it. So that's kind of what gave us this big break. And we also broke a macro trend, which signified that massive pop there. What's really crazy though is I mentioned this in a tweet earlier, is this blue line here is your 200 SMA. This is actually really crazy. So before a 34 run, we had plenty of tests on this 200 SMA. Like I'm not going to go super far back just due to time, but like here's a test. Well, it also crossed over your 1884 mark at the time. So that would have been a very tough break to have. So shorts kind of were in the driver's seat there for a little bit. And then once they got us under 1884 or rejected under, basically it's just like, okay, after 1884, shorts have the ESD band to get under. Well, they tried to do that. We broke out, retested both of these lines again and broke through. Looked like we were going to kind of squeeze it into a wedge here, if you see this. And they ripped it down under the ESD band. Then next you got your 50 EMA. Well, once they ripped it under that, these crossovers aren't the best. You got a nasty push down. And then we luckily had our macro wedge catch for a little bit. They kept trying to drag it under. When I mentioned that piercing bands though, that usually indicates a trend reversal. So it pierced these guys. Got your trend reversal, tested, came down, tested again. But anyways, this is all a test of your 200. This is a very key one that I'm going to talk about here soon, is a test of your 200. Basically going from the bottom of your trading range, testing your ESD band, coming off of it, breaking your ESD. Then you also test your 50 EMA, your macro wedge, come under it, test it one more time. And then this is where you get a nice little pop. I mean, you broke a lot of indicators here and confirmed your break over ESD and 50 EMA. And once you're trading above the 50 EMA here, you become, AMC becomes very volatile in regards to buying pressure. Is one, it flips the algos to start buying when it's above the ESD band. Obviously, not every algo is programmed this way, but I know a good majority are based on standard deviations. So what was nice is you broke through here, consolidated down, went up and retested this. Tested straight on the 200 SMA. Pierced the band though, which is fine, like this can happen. But then you came back, consolidated, rode up on your ESD band, then you got a strong test and you broke it because you're trading above your 50 EMA and your ESD band. Like this is very bullish in general. Once you broke that, like look at where it took you. Took you way up to 1884. Then you even got a retest of the macro, came back down, you stayed above this band the whole time, and then you took off. Because once you start breaking indicators like this, key resistances, it just becomes almost unstoppable from a long perspective until they do a strategic halt. But anyways, what intrigues me here is that we keep finding our lows, bouncing off of foundational TA, breaking above the ESD band. We'll test the top. Here's your 50 EMA you also tested, came back under, came up again, and if you look at the broad market here, we really just got ripped down broad market wise, but this is very intriguing. Pierced the band, rode the 1050, came back above, and then these just keep lining up in our favor. You got your ESD band crossing the upside of the 50 EMA, explosiveness, tested, kind of held down for a little bit, and then once we got above, we blew up to about 14, almost 15 bucks. And then the next day we tested the 200 SMA. We broke it in the morning, but of course they just yanked it down. Like I wasn't super surprised by this. I didn't think it'd be quite as dramatic or last near as long. But they knew a lot of people were expecting just some strong movements all week, so it didn't fully surprise me. Because if you see, here's the same exact example as something I covered over here, to where was it? Yeah, it broke under a key macro trend and they just ripped it down. Well, same thing over here, broke under a key macro trend and then ESD band and ripped it down. And try to continue to do this on the macro wedge, but I love the fact that this is holding here and that we got a very similar kind of square bottom here. These are kind of our bullish indicators too when you get something to this extent. But like I said, came down, tried to get under us, tested this macro wedge, broke above the ESD band, consolidated under the 50, stayed above, broke the 50, and then treated this as a support. And now the ESD band today actually crossed back above the 50 EMA. So I mentioned this in my last video, that it may dip slightly below, but it would take a day or two for us to get back above. Well, that's exactly what happened. I really think we're going to be staying above this, but we'll get into the micro here too, because I've already pushed in 20 minutes and didn't even realize it. So we're over the ESD band, over the 50 EMA, and then we went up, tested the 200 again, came back down within our ESD band, and got this nice little pop late in the after hours. Well, now your 200 SMA is lining up with your 14, it'll roughly be about 14.15 tomorrow. These will kind of curl down and line up with each other because your 200 won't move near as much. But this ESD band, like if we're continuing this uptrend, which we very well should in the morning, we'll be having the ESD band above the 50. And what happens when the ESD band is above the 50? It gets extremely volatile. Like this is a 1640, which is a key pivot point that I'm going to talk about in another video. But basically what I'm forecasting tomorrow is this crossover is fully going to get confirmed. We're going to break this 1450. And then when that happens, I think we fully go to 1640. At least test it. I don't know if we'll stay up there. We might come down and retest this SMA or something on a lower indicator that I'm about to show you. But I fully think this is going to happen tomorrow. Again, don't treat it as financial advice. This is just what I'm forecasting in the day to come tomorrow. So here's the break of the macro trend. Very healthy style movement to get back through it. It's really lining up as something similar, like hopping our trading ranges like I mentioned before. Came up, swooped under, came down, came up, and they swooped under. And then this swoop is getting shorter and shorter each time, which is very good. But it's swooping down like this. What I'd like to see is, obviously we're well above it. Like we got this crossover here yesterday, which kind of forecasted what we'd have today. So I'm suspecting the the ESD band to continue up, and we should. Basically, what I'm expecting is that we'll open pre-market, and we might get another pop in the pre-market. Again, they know we're also above this area, so it could try and drag us down to like 1340, 1330 range if the broad market is low with CPI data on Friday. And I think max pain is like 411 or 413 last I checked. So what I'm expecting is something kind of similar to yesterday. We'll open up. We might get dragged all the way down to 1320. I don't know if they'll have the firepower or ability to do that with the trading zone that we're in and being well above the 50 EMA on the 1 hour. So potential chance, usually we re-blip down to like previous low candles at double bottom, so like maybe 1330, 1340 range. We could blip down to if the market's not completely bloody. But I'm expecting a big push, probably pretty early on, like our volume's starting to finally rotate back in a little bit. To where after that dip down, within the first 15 to 30 minutes, I would suspect we'd be up trading towards this top range again, like 1395, maybe 14 range, and then 14 to about 1415 is going to be our vibration zone tomorrow, meaning that that's where shorts get uncomfortable trading at. And then if we can consolidate and kind of continue this accumulation, that'd be best case scenario. And then sometime late afternoon or potentially late morning, I see us breaking this 1450 line, and when this occurs, you're gonna get something similar to this. Not the downtrend, not near as deep of a retrace by any means, but I think if we break this 1450, 1420 range tomorrow, that you can kind of see has been treated as resistance and support. I think we'll at least go towards 15. There is a slight resistance about 1505, 15 range. But once we clear 415, it's going to get up towards $15 in a hurry. And then if that wants to break, we will see 1640. I don't want to call out anything too crazy quite yet, but tomorrow I do see more of a higher percent gain, as long as the broad market isn't completely dropping out on us. I don't forecast it doing that, but we can check out futures real quick. But that's kind of what I'm looking at. Not too much of a sideways trading day tomorrow. We could get some accumulation, but I really think we're going to break this 14-15 range and then hop into the next trading zone. So we've came from down here up into this trading zone. All right, tested the orange one. Now we're back into this trading zone, and then next is going to be above that 14 range. So if we can continue this upward trend, it's going to be extremely bullish. So some big calls being bought were $20 calls to 617. It's funny because the call side is paying 25 cents versus the put side, who also got $20 puts, we're paying $6.55. $655 times 2,000. That's how much you're willing to pay to kind of suppress this crap. And here's $15 puts to, or sorry, $20 puts to 715. They're paying $7.55. 755 times 1,750. Here's the same thing to 617. Like they do not want this thing to go before that 617 date, but they're really not gonna have much of a choice. Like they're paying some crazy premiums for some of these puts, and it just blows my mind when we're having a 3-to-1 call put ratio almost daily. So I'll check out futures real quick just to see what we're looking at in regards to that. Pretty flat, 0.03%. Yeah, people are gonna say, oh, that's a death cross, XYZ. This is the 1 hour. These are future contracts. They trade a little bit different. If you flip over to the 4 hour, my computer is going to give me the ability to do so. You'll kind of see here how it works. Like just the wavy style of this that it's currently in is just, I've never quite seen something like this volatile in a long time. Because look at the coil that it's getting on this. So this is your 180-day 4 hour on your SPY futures. You got your crossover on the 4 hour with the 50 EMA, and look at what this crossover brought. Massive pop-up, consolidation down, testing the 200, came back under it, tested the 50, up above, down, and straight up. But then this style of wave shows that they're stretching for liquidity, and they're trying to do everything they can to give us intraday flushes to just try to grab any premium they can. So I don't forecast this thing dipping too much. We're over the 200 SMA now, so maybe we could dip down 4,087. We could dip down a little bit, maybe 0.5% to a percent, but I mean, we saw what happened today when SPY took that massive flush. Like AMC held up, so these are still important, but not vital to things. Just wanted to kind of point that out with how futures are looking and what my outlook's looking like for tomorrow. Again, $14 to 1450's vibration zone. Potential blip down to 1330. They could try and get some consolidation down there within that 1320 to 1350 range. But I really think we'll break 1450 tomorrow and potentially test low 15s. If the low 15s are broken, we'll go up to 1640. Especially if markets are green. Like if they're running, we could get another push to 1640 and maybe consolidate between that 15 to 1640 mark. But don't want to blab too much. 30-minute video, a little long, but thanks for joining. Hope this was helpful. If you want to join Rico's Discord, like I said, I'm in there daily helping guys out just with understanding market dynamics and what I look for. So appreciate you popping on. If you want to give us a like and subscribe, that'd be awesome. Comments are always appreciated as well. But as always, have a good one, and let's make this a good end of the week.